Spur Corporation owns Spur Steak Ranches, Rocomamas, that's doing well, Panarottis and John Dory's.
Right, so now we're talking about a company established for over 5 decades, came out of Cape Town, started with the original Spur stores, and it's been okay. I mean, it's been a little bit circumvented by famous brands, but it's battered on.
Market cap 3.5 billion rand, a PE of 19.2 and a dividend yield of 4.5%. These stocks aren't cheap.
Yeah, so this one is actually the cheapest of the lot. If you look at it on a forward basis, it's on a forward P of about 15 times. So that gives you a little bit more comfort from a value perspective. But yeah, I was thinking about Spur yesterday because I had the most amazing Rocomamas burger, and that's just a brand that has really taken off. I think when Spur bought them, they had four. They had 4 franchises, and these guys are just popping up everywhere. And
you're talking about Rocomamas now?
Yes, I haven't spoken to anyone who says, no, Rocomamas, it's okay. Everyone's like, it's just beautiful. You get so much for what you pay for.
Passionate.
Yes, but it's...
Don't you feel like going to Rocomamas and buying a burger on the back of that endorsement?
Right now,
well, it comes at a very opportune time and a very good time for Spur, where their steak ranches have really plateaued in terms of growth potential, footprint.
Still one of the best places to visit if you've got young children.
Absolutely. Do you remember that poster that they heard on Jan Smith it just said parental bliss full stop with a little Spur sign in the corner? My friends who have kids love going to the Spur because you can actually relax.
That little gym that they go and play in. Actually, that is the big attraction for children.
Yeah, like your kids' age.
Yeah, very popular in Plate, that Spur, I'm sure. Now, let's look at the share price graph.
So it hasn't done too well in the last year, although it had a very nice run up in 2011, 2012, 2013 when it sort of woke up. Prior to that, it had also been seen as being a bit sleepy. So I guess the issue really is where is it going to go and how is it? It's kind of pulled its horns back from some international acquisitions. I think they're exiting their Australian operations.
UK as well.
Yeah, they're still in the Middle East, so that's okay. But I think the future probably lies more in 2 things, Rocomamas, and secondly, there's something cooking with a relationship with Grand Parade.
So that's actually pretty interesting because we were speaking about the other day as well.
The relationship with Grand Parade?
Yes, because they haven't done anything. So we kind of expected some synergy gains there. We thought they were going to share some manufacturing capability, maybe look at I don't know, gaining from each other's experience, using some of the meat manufacturing capability, especially at Grand Parade, because Spur's importing 90% of their spare ribs. I mean, there's capacity there. They just haven't done anything yet.
So Chantal, you mentioned the forward PE of 15, the least expensive of all the choices that we've got in this investment theme. Hot or not on Spur?
So from purely from a valuation perspective, and the fact that I think this is a solidly run business with some runway and the potential to actually get these synergy gains with Grand Parade investments going, it'll have to be a hot.
Hot or not?
Let me just explain. Grand Parade is this Cape-based investment group we're going to talk about that actually owns Burger King and a couple of other things like Dunkin' Donuts. Now what's happened is that they, in the last week, bought another 15% stake in Spur to take their stake in Spur up to about 25 or something. And
so you could
Pierre
definitely
van
be right in
and
that
Hassan Adams appear to have some relationship going on. So the question mark really is are these 2 groups going to get together? I don't really know.
Would the competition authorities have any issue with that?
Well, at this point, it's still a minority interest, so there's no immediate prospect, it seems, of a buyout by either party, but it's possible.
25%, as you were saying, ramping up to that 25%
and obviously taking
level.
out their checkbooks and buying a stake from Coronation at a premium to the current share price suggests some kind of intent.
Hot.
So I guess I'm going to go hotter on Spur just because maybe something's going to happen plus the underlying
That's
business
unusual.
looks fine.
You don't usually bet on something because of the corporate action,
It's true.
potential corporate action.
So the main justification, I think, would be that it's relatively inexpensive, the earnings are in an uptrend, and they've solved some of their historic issues.
You agree?
Yes, absolutely.
You hot?
Yes.
Hot.